Welcome! This is Solopreneur Success Strategies, where we talk about mindset, your website, your brand, your social media marketing, your customers, how to sell to your customers, how to find your customers, how to talk about the skills and knowledge you need in your business, and free software and tools to help you save time, money, and be more productive, as well as strategy and systems here on Solopreneur Success Strategies. Welcome! Welcome. This is Jane Gardner, and welcome to Solopreneur Success Strategies TV. And I think I have just got to say again that welcome to Solopreneur Success Strategies TV. This is Jane Gardner, and welcome to Jill or Jack of All Trades Thursday, where we talk about the skills and knowledge you need as a solopreneur. Right now we're talking about business numbers, so don't be frightened. I think this might be the last day for it, because beyond this you have to do more research type thing. But anyway, it's going pretty good. I think hopefully if you go back to my YouTube channel at jgtips.com/YouTube and have a look at the videos there on Thursdays, you'll be able to catch up and understand some of the concepts we're talking about today, although I am doing a review. And we're going to be looking at financial statements. Now, why is this? Well, because as an entrepreneur, and especially a solopreneur, you have to know a little bit about a lot of things. You need to know about your website. So we had a look at HTML for now. We'll look at WordPress later. And then we have to look at some of the things about the computer and what's going on there, and cash flow and finances, and how to be able to read a financial statement, which we're doing today. And then maybe email. What do you mean I need email? And how to organize that, and all these other kind of challenges that you have as a solopreneur. All you want to do is sell your product or service, and now you have to learn all this technology, which is frightening. So I hope that we'll be able to teach you a little bit so that you don't get so frightened about your technology. But yes, we'll have a looking at cash flow, sales, and selling. We'll have to look at that soon. Website, email, subscribers, computers, silliness, and on and on and on. So there you go. So we've been looking at business numbers, and these are the numbers that you have in your business in order to see how you're doing. And so today's training, we're going to be looking at the financial statements. We had a review last week of some of the description of some of the statements you need to be able to understand. And today we're going to be looking at your income statement as well as your balance statement. This would be something that your bookkeeper would put together for you every month if you wish. And I would recommend that if you are making income and revenue, and having to pay your taxes, etc., that you do hire yourself a bookkeeper at one point when you can afford it, because they really save you the time in terms of doing your accounts for you. I know we did our own at the beginning, and that's why I know a lot about bookkeeping, and now we have a bookkeeper, which saves me the time to do this. So let's have a look at the business numbers. So in any business, you need to know your numbers. By looking at some key figures, you could immediately increase your daily profits if you're aware of how you're doing. So for example, the revenue is basically the basic picture of how your business is performing. It's the income that is coming in, multiplying the price at which goods or services are sold by the number of units or amounts sold. And you just ignore all your expenses, etc. You just look at how your revenue is coming in. And when someone asks you, what is your revenue? You know what that means. That's just before anything else is taken off. It's the income that's coming into your cash or income, or, well, there's also accounts receivable that are owed. So let's stop there before we get overwhelmed. And then we looked at profit, which is, you can have a gross profit. That's the amount of your revenue minus your cost of the goods sold. And then there's the net profit, which is the revenue minus the cost of goods sold and all the other expenses, like your office expenses. So that's the net profit every month. That will be money that you can put back into the business, or you can pay yourself a wage on. Well, actually, that's not true. That's the money that goes back into your business. Obviously, an expense would be your wage that is being taken off of your revenue and to make the net profit. So ignore that last comment. And then there's a cash flow where you examine how the amount of money available to your business that you can actually use at any given time. In our business, we have a real issue with cash flow because we have a lot of accounts receivable. We do try to get 50% up when we are doing our service, and then 50%, and then the rest of the money when the work is finished. But of course, there's always sometimes a month delay in when the money is sent to us from another company, because of course they also are waiting to be paid from their inventory, their clients too. So we have a real cash flow that is in and out. Anyway, don't get me started on cash flow. It's always the biggest issue for any business. So if you can have a regular cash flow where you don't even understand the word cash flow, then you have a very good business. And then another word you need to know is price point. This is the price that you are selling at for your product or service. So you simply take the amount it costs you to manufacture the items, or whatever you feel your time is worth if you're a service industry, and then you multiply that by 5 to get the overall recommended price that you will eventually charge your customers, which takes into account some of the expenses. So that's a 1 in 5 rule. But do not be afraid to tweak your price. Testing different prices can be effective of learning what the market will accept. And we did look at how to define a price point previously in the episodes on here at the YouTube channel. So just go back there and you can see the session on price point. And then last but not least is expenses. So they're the cost of your goods sold, or as well as your running costs, your salaries, or money that you're putting back into the business. These are knowing your expenses and overhead is crucial because it allows you to work out your profits and pricing. So now we're going to go on to something new. It's the income and balance statement. And first off, you sort of need to know some terms to understand an income or balance statement. And I would certainly recommend you taking a bookkeeping course, whether it's online or just getting a book out on the simple way to learn bookkeeping, maybe a bookkeeping for dummies, etc., so that you understand all these terms. And once you start inputting your revenue into a bookkeeping program, if you decide you're going to do it, then you know what they are talking about in the program. So for example, petty cash was one term that came to mind, and that's the cash on hand in the office for expenses, and usually that's called a float. So anytime money is used from the float, the petty cash, then you reimburse it back into petty cash, so that you always have a certain amount of petty cash on hand in the office to pay for any expenses. Accounts receivable, that's an important one for our business. Accounts receivable is a service rendered or the proper product sold, but the payment is delayed and needs to be paid to your business. And so you have an invoice outstanding for the payment. And of course, you receive it at a later time. So it's receivables that you will be receiving at a later time from your customers. Accounts payable is service or products that your business needs to pay for that you had or purchased, and they allowed you to take them, obviously, and then pay later. So that would be something like your MasterCard or your Visa. Also, your wages are all accounts payable. I mean, obviously, if you want to go in more detail, that will be here forever. But just so you know, these are some of the terms you need to have a look at. Assets. is a term that's used in income and balance statements, and it's the property or cash on hand that is owned by the business. And that's the simplest way to say what an asset is. So, for example, the car that you have that is through the company is an asset, or your computer is an asset, or for us, our library is an asset and has a certain value, as well as, of course, the revenue from the clients. Liabilities are the monies that are owed for expenses, short-term or long-term. Or they are also the monies that you have spent, obviously, for expenses as well. No, that's the money liabilities that are owed. Equity is the value of the business when you subtract the liabilities from the assets. So that is the expenses, etc., from your assets, which is, of course, the revenue coming in. Retained earnings is the earnings from last year to be reinvested into the company, that have been reinvested into the company at the end of the year when the accountant does the books. And your current earnings is the earnings that you have made from your income statement. We'll have a look at that in a minute. And so your equity is equal to your assets plus your liabilities. Or you could say your assets minus your liabilities, since liabilities are usually a negative. But of course, in terms of the language, it's assets plus liabilities, which are a negative. So those are some of the terms. So let's have a look quickly at an income statement, and I hope you can read it. Usually an income statement is just talking about the monthly income, or it can be for the beginning of the year until that time period. And you're looking at your revenue that has came in, as well as miscellaneous revenue, and that would be the total income that has come in. And then you look at your expenses. You take off your paywall, your wages, your taxes, and then you look at your general expenses like advertising or automobile, office expenses, and then you add up all your expenses and then get a total. And for this one, we had a total income of $5,050, and then we had a total expenses of $3,340. So the net income, and this is for the month, is $1,710. So then what happens is then you use that $1,710 and put it on your balance statement, which you can't read, but I will tell you what it is. The balance statement is your current assets, which includes your checking account and your accounts receivable. So for that month, it would be for that month, I guess, the total assets were $3,460. And then the liabilities would be the accounts payable plus other liabilities. So the total current liabilities were $250. And then long-term liabilities as well would be added to that. And so the equity is equal to, so equity is on the statement. You look at your retained earnings from last year. So for this one, it was $1,500. The current earnings are from the previous income statement was $1,710. So the total retained earnings for this month are $3,210. So your total equity is equal to your assets plus your liabilities, but of course your assets are negative, so it's assets minus liabilities is $3,210. So your liabilities plus your equity equal your assets, which are $3,460. So usually that is just an extra statement that the accountants like to use. So what you're looking at is your equity for that month would be $3,210 because it includes all your assets minus the liabilities and plus your retained earnings from previous year or previous time period. So that's sort of roughly what the idea is for an income and imbalance statement. And sum it up, there's revenue, which can be either gross profit or net profit. There's cash flow is another number that you need to know. You need to figure out your price point. knowing what your revenue and your expenses might be. And then there's the expenses number you need to know. So you need to know the cost of goods, and you need to know your business expenses. And then, of course, you need to know how to read an income statement so you understand what's going on there, as well as having to know a balance statement, understanding how you are doing. So you can go back and check out some of the previous episodes at jgtips.com /YouTube. Or if you're on audio, you can go to jgtips.com /JJT and have a look at this current episode video on my website. You can contact me at info@jane-gardner.com with any questions. This is not one of my favorite things to do. Bookkeeping is not one of my favorite things to do, but it is something that I understand and how to do it. And so it's always good to know how your finances are doing at any point in time. So this is just a sum up of some ideas of what things you need to learn about in order to be a solopreneur and comfortable and knowledgeable about some of the things in your business. I'm not sure what we'll go on to next week, but for now, this is all there will be on your business numbers, and I hope that it was helpful. This is Jane Gardner at jane-gardner.com, and this was Solopreneur Success Strategies TV, which you can find at jgtips.com /YouTube. And please feel free to subscribe and go and look at some of the previous episodes, and then you'll understand, especially the one on price point. I thought that was pretty good. Thank you. Thank you for listening. This has been Jane Gardner at Solopreneur Success Strategies. Please go and subscribe at jgtips.com /programs, and also to find out about other programs as well over at jgtips.com /programs. And over there we have a free mindset magazine for you to check out at jgtips.com /mindset offer. So welcome. Thanks for listening, and I hope to see you again here tomorrow, as this is a 7-day-a-week show on mindset, your customer, getting your message out on social media and on your website, talking about strategies, talking about business systems, talking about all kinds of things, including the skills that you need as a solopreneur. So please come back and subscribe at jgtips.com /programs. Thank you.